I think on the Brexit clauses, we found wherever there was a contract with a Brexit clause, they were exercised, and in most cases, vendor and purchaser weren't able to agree an adjustment in the price. I think what some of our overseas clients are saying, both in the States and the Far East, is that things are obviously cheaper now through the currency depreciation, but it doesn't also mean that you're getting fair value because you have to change your underwriting assumptions as well. So I think they're still looking at, to assess in terms of more data. What we used to find was pre-Brexit that sort of private equity-based US investors in a bid auction situation, unless it was an asset that necessarily was limited to that type of investor, were usually underbidders by about 10%, and obviously that gap has closed. On the Far East side, so it's one thing in the States actually is that, going back to your Core Plus thing, we are seeing more interest from US institutional investors into the European market, partly because I think they think the sort of returns in the US market are more mature, and sometimes coming through some of the sort of open-ended funds like US investment banks such as JP Morgan have established. So I'm aware of a number of situations where US institutions have invested into some European funds initially. And I think partly because of the whole issue about maintaining returns, which obviously their liabilities have gone up as a consequence of the reduction in interest rates, and they're getting very poor returns on their fixed income and volatility on their equities. One consequence of that is that probably institutions will go more up the risk curve, or will have to accept more risk to get the returns that they used to get. On the Far East side, we're still seeing, I mean, it is a more complicated market for Far East, for a Chinese insurance company to get approval to invest. I mean, they're two separate regimes, but it takes longer than it used to take. We find if you've got a Chinese life company that's funding the acquisition from its Hong Kong base as opposed to China mainland, it's an easier process. There is, as you say, the second generation of Chinese investors coming through. We still find Chinese interest. I mean, we're working on a portfolio disposal at the moment, which is real estate based but has an operating business component, and we're down to the last 7 bidders, and they're all from China. But that is where the asset class is partly real estate and partly an operating business, so it's a slightly different risk profile in this.